Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, September 26th, 2023. I am Frank Ochoa, aka PivotBoss. Happy Tuesday, everyone. Here's a look at the daily time frame of the ES. In the previous session, the markets just held off of pushing through the lows too much here. Instead, developed mostly range-bound days at the lows. No closing here on the highs here for the ES. Look quite bullish here, but for the most part, the action during the day was mostly digestive, fairly narrow range, but not super narrow range. But now you add to that the previous day's range on a Friday, plus the developing range today. Now you have yourself a 3-day developing narrow range here. So if we put this to 3 days here, you'll notice you got very narrow here, 64% of average on that 3-day range basis. And this market right here sitting right on top of the previous week's close and low. Those two levels right there, the close and low, and trying to hold above those levels. So that's the idea right now. Which way do we go away from these levels? We've been trending downward here very aggressively since the trap in reverse above 45.50. Big time outside reversal, thrust reversal sell, and this thing drops to the previous month's low, as we mentioned would be the case once we push through the midpoint. Can the market hold this zone here, or will new highs be sold for a trap in reverse down the way? So watching to see which way we break out of this 2 to 3 day narrow range. Prices above the previous session's high. You want to watch very closely and carefully here. Any push through there could open up weakness below. If we can push through that zone and hold, that opened up some upside here to the previous week's high price. So bulls looking for the previous week's midpoint, 44.36s, if price can get away from the previous week's low and close. All right, let's take a look here at the NQ. The NQ, similar narrow range price action here, 58% of average on a 3-day narrow range basis. Today's range looks almost identical to the previous session here in its range inside day at the moment to yesterday's range as well. Again, very aggressive sell-off that we've seen over the last week plus, starting with the failed new high outside day down. FOMC key level goes offered, and we're now holding at these lows just shy of the previous month's low price. So the expectation would be for price to still go down there and grab that low. That's 14.6. Any pullback could be seen as a selling opportunity, a trap in reverse. So any push through 15K, watch it closely here, as that could be an opportunity for bears to defend for a continuation to 14.6, maybe a bit lower than that. Right now we do have a clear range that is developing here. The low end of the range, again, the previous month's low here, and the top end of the range about 16K. You have kind of a midpoint zone right in the middle of that zone, right in there. So again, working our way down to the bottom. Once we get into this area, perhaps we fade back up towards 16K ahead. That could be the path forward if the market's not ready to push back through 15K with any confidence. So if we push up here with a falling 8 period and we start to see some weakness, it could become an outside day down, or perhaps a continuation down over the next several days, depending on when that attempt occurs. Watch 14,750 very closely. If we take a look here at crude oil, this one right now down about just over 0.5%. What we're seeing right now is the potential entry for a bullish trade into 93 to 94. What we have is a very narrow range over the last 4 sessions here, and now we're getting a downside push through the bottom of that range, and so far there's a failed breakdown that has occurred. If you look at the more intraday charts here, that's the previous week's low. Price dropped into it during the London Open, rejected fairly quickly. A higher low on that level has led to a return back toward 83, or rather 89.30 here on this bounce back. So again, if bulls can continue to hold the edge of this range, you have a shot to come back toward the top end of the range over the next day or two, and then perhaps a continuation to the upside ahead. If we can break through the top of this range up ahead, 5-day range, you're looking at about a 5 to 6 point rally up ahead from the low. So if this is 88 and we're looking at 6 points, that's 94. So right now, looking to see if this market can continue to hold on to the morning's pivot low. That could provide a great bounce ahead to the next area of resistance above. Taking a look at gold futures, down about 1/3 of 1%. We've seen price rotate downward here off the previous month's close and that FOMC key level, boom, dropping away from it. On this day, we were looking for a return trip back to that close. We got it, and on the retest here, it's dropped it right back down to where it came from. Now, here's the thing with gold lately. These have been lower highs, lower highs, lower highs, lower highs, and these have been higher lows, higher lows, higher lows. We're now here. Are we ready to see expansion out of this range, or do we continue to see chop back and forth between 1920 and 1980? That's the zone right now where this market is in chop mode. Be careful here as it could continue to see whipsaws back and forth. Now, initially, the move away from 1950 has begun to occur here. That could lead to a further breakdown ahead, but we got to see it prove it. And right now, it hasn't proven that it can break out from this coiling range just yet. So keep an eye on this area here very closely. Lastly, looking at the YM. Now, the YM has shown quite a bit of weakness. Big time trap above the key range high. That was a huge one right there. If you take a look at the key range high here, there's the high. There's the key range low. Here's your midpoint. When we put in that high, we were looking for a snapback to the mid. Price rallied. Up here, we were watching for a potential trap and failure at 177. If so, back to the mid. This failed new high suggested we may see a move to the opposite end at 34,062, and we got it. So perfect movement off this key range so far to begin. All beginning with the forecasting of the midpoint of the key range on two strong pivots. So this range remains intact. You can see how price is right now holding down there. Double bottom at the previous session's low, double bottom right at the key range low, at least for today. So right now, another 3-day narrow range, 61% of average. And that could continue to build out. We could continue to see development of this range overall. Given the downtrend here, again, any push to the upside, watch closely because a trap and failure could open up more weakness ahead. The key level down below to watch very closely is going to be 33,800. Can price get into 33,800? Last time we had it as a buy candidate on these rotations. We had it as a target after that rotation. 33,800, a big time magnet level. Great market structure level where we've seen it become resistance and support. We missed it just barely here. So this next rotation, do we come down and get 33,800? If so, 33,800 could be a buy back to 34,800, maybe even higher, 35,800. A failure at 33,800 opens up a return back toward 32,800. So those are the market structure levels here. And as we failed here and rotated into the bottom edge, watching this level here closely for signs of a potential bounce. That would be primary 1. Failure here would lead to case scenario 2, where we lead to a push back into the previous market structure. So keep an eye on 33,800. All right, that is it for now. We'll see how this develops heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.